Good morning, guys. Today we're going to talk about a special stock which is CoreWeave. And those who don't know me, I'm Panakwant, and this is my X page where I go through like different stocks. And today I'm focusing on CoreWeave. Why? Because the stock dropped 12%, and why I'm saying it is a major buy right now because the capital expenditures and all of the things that we see from CoreWeave, I feel it's really fascinating. So this is the pre-market move, 12% down, but the next thing for a couple of months it's going to be sideways because of Iran war coming in. There is a lot of macros that are uncontrollable, but still it's not going to dip. It's going to follow this trend line, and I see it going towards 125, and the first target would be like above 100. Why I say it? First of all, we need to understand why was the sell happened, because the quarter one revenue guidance that they have was a big miss. The core we've guided for $1.9 billion, but Wall Street expectations were 2.2 billion. So like that's what there was kind of a gap, because they were having massive revenue guidance every quarter. Their EPS loss was much worse than it was expected because they are doing a lot of expenditures. So that's what it is. And then massive capex, like the expenditure that they are doing on making their infrastructure is way too much, because they announced like they would be doing like 30 to 35 billion in 2026, and which is more than double, which was like 15 billion in 2025. So people are thinking the amount of debt that they're issuing is too much. And then also there has been a lot of noise around insider sales happening. So but like still my recommendation, it's a buy. You see my 12-month target is 125 plus. Why I'm saying this again, like there are some key metrics which I have shown over here, like what is the capital expenditures that they're doing, what is the contracted power, what is the total debt, and what is the year on year revenue growth. So seeing that, the very first thing which comes to my mind is the revenue backlog. They have a lot of backlog which is like 4x year on year. So that is basically, once they build it, they will have a simultaneous, a cash flow. They have a lot of revenue growth as well. Then they have NVIDIA partnership. They have customer base, which is OpenAI, Google, Microsoft, and whatnot. So right now, what I am saying is a major buy. Again, I will go into more into the analysis. Like rather than first analysis, I will just like to show you like what was the chart. So this is the CoreWeave millions in growth, and this is regarding like from 2025 for 2024 how it started. So quarter 4 2024, you can see that it was so less, but in quarter 4 2025 it was before exponential, but now because already it's in billions we are talking about. So infrastructure, it takes time. So it became linear, but it's still too big. And similarly, the revenue growth that you are talking about, it's crazy how it is growing. That is exponential. That means the infrastructure built to revenue that they make is a major difference. And then I will talk more about the financial analysis. So revenue, as you can see, like revenue is increasing, so that is not a problem, guys. Like they are saying, and this is a massive build, because they have so much of debt. They are thinking about making from 5,000 to actually doubling every time, which is a great thing. And similarly in percentages, how much expectation is there, and you see like 168%, then it's jumping 145%. It's not going to be that much year on year increase as they are doing massively, but again, like it's above 100%, which is huge. And similarly, what their profit would be, the profit is more than doubling. It's like, I would say it's tripling, right? So that's where people actually love this stock, and they're not paying attention to it. The gross margin at the end of 2026 is about to be 40%, because they are buying everything in cheap. The memory price is going off. I know that NVIDIA is going to raise the price of the GPUs. There is a lot of concerns which is going to happen, but right now they're building in massively, taking debt. I think that's a strategic move to their overall architecture, because everything's going to be AI and they require a lot of power. So what they are moving through, expending now rather than expending later, which the cost of inflation and all of that happens. So that's good. but the loss which was there is concerning, right? Like FY 2025, they had not only tripling their margin, not margin, but their profit. They're also tripling their debt. But this is the point which people are missing. In 2026, they are saying they're going to reduce the debt. So that's something which is there. So that's why I'm saying that it's a buy. And look at these, like the analyst, all the analysts, like they might be wrong, they might be right, but no one knows what's going to happen. But these analysts have a very good understanding about how the total markets are and how it works. So five out of 10 can be garbage, but five of them could be really good, because they are the people who are in the market. They have their own specialty. Like me, I'm covering all of the stocks, so I don't have any specialty, that whether it's CPG, oil and gas, or like any retail stocks. I just try to bring down different stocks and try to talk more about them, looking into their balance sheet and what and where the people are invested in. Because here a lot of CoreWeave has a lot of retail partnership. It also has a lot of investors. So that's why, like, I'm not even an expert, but I am laying down the facts over here. Like, subscribe to my channel and follow me on Instagram, not Instagram, but Twitter. Thank you so much.